Good morning, everybody. Oh, we just got Ryan. He's late.
Good morning, all. Good morning, Stel. Good morning, Ryan. Good morning, traders.
Good morning and happy pre-NFC, pre-FOMC day.
Yeah.
Yeah, it looks like.
Yeah, dollar's getting a bit tested here, huh?
Yeah, it's. Let me share my screen before Ryan takes over.
There he is.
He's sharing. Okay.
Morning, everybody.
Oi.
Start without me, are you?
Is that you getting a little bit slow now? You changed decennia on your age. Slowing down.
I'll still have you in a race.
How you doing, Ryan? Everything all right?
Yeah, not too bad, mate. Everyone all right?
Good, good. The market seems to be very all right today. I don't know why, but it's getting a little bit bulled up ahead of the FOMC. I don't know if you guys heard anything. I mean, I know yields are dropping, and that's driving.
China.
What did China do? I missed it.
Yeah, I'll follow that coming out.
Okay.
The headline rundown. Yeah, lots of bits and pieces going on
Cool.
at the moment. So yeah, we'll let's get stuck into it now and
Yes, sir.
get it all done. So we'll start with China. It's PMI day again. Finals in a lot of the countries. The China manufacturing PMI jumped by 2 pips to 49.2 versus 49 in the flash. That was up from 48.1 last month, so a bit of an improvement, but still in contraction. The PBOC fixed up into the 720s today. Again, still playing a bit of a chase up in that rate there. We had been up back up to the 735s, near 736 yesterday. That's reversed around a bit. And yeah, there was a tweet out earlier this morning saying that China is forming or looking to form a reopening committee with a view of assessing COVID policies to make changes in March next year, potentially. That gave stocks, started off in China, giving stocks a lift. That's given a whole big shine to risk at the moment, not massively. I mean, you look at something like Aussie dollar, which you think would be one of the big beneficiaries from such news, and we're up, but we're not breaking any new ground. We're not even close to that 65 area. So a bit of risk coming into the market. CNH has obviously reacted to it, dipping right down again. But then we had one of the daily meetings, and the foreign ministry was asked about this committee being opened, and he said he's not aware, or they said they're not aware of the situation. So not a flat out denial, but no confirmation either. So I think we need to be a bit careful. It does need to be confirmed. If it's not confirmed, or in fact it's denied, then we're likely to see a complete reversal going on there. But in the meantime, that's what's driving particularly Asian markets at the moment, or this morning. So we can't. We have to take it for what it is in front of us. What do you make of it, guys? Is it going to happen, or they've just come out their Congress saying that they're going to stick to zero COVID policy? Are they going to make a change or announce a change that quickly?
Yeah, but the committee said that they would think about stuff going into the first 3 months, or after 3 months in 2023 or so. That's the rumor. I would not completely rule it out. They can't stay in their COVID zero forever. Same time, Foxconn apparently was handing out cash for people to come back to the manufactory. It's rare that something comes out of China where there is no fire, right? So there could be a bit of smoke ahead of stuff to happen, but I think it's the positiveness coming out of it is a combination of, we've had the end of the month, we've had those positive rumors on China, and then yields coming off a little bit, pre-FOMC. It's a combination of everything, right? And then we'll come to that later, a bit of stealth intervention by the MOF in Japan, and it's a combination of everything, what we've seen this morning.
Yeah, but I mean, if you look at CNH at the moment, when we got that big drop when we were up here in the 730s here, that drop was just basically on interventions, but also China saying that they're going to prop up stock markets and don't get overly heavy on one shorts, and that was a fairly decent move, and this is nothing in comparison. So if those rumours were really real, I think we'll be seeing a bigger reaction here. That's not to say they're not real, but just comparing one move with another, you would think China reopening in any way, shape, or form would bring a real big risk out.
Yeah, but that's
doesn't suggest as much yet.
Yeah, but that's they're saying it should be for somewhere in March 2023. I haven't really looked too deep into it, but it's not for tomorrow, right? So but in the meantime, I think it's Morgan Stanley also, or one of the Morgans, I think, who said that they are actually buying the idea, and they say it's perhaps time to re-enter China. But and then again, against that, you have the PBOC fixing higher, and again, albeit a smaller amount, injecting liquidity in the market. So
yeah,
it's a bit of forces pushing and pulling in all things CNY, CNH. But it's it has put the markets partially on the move. Risk is doing a lot better on the back of it.
Yeah,
and metals are buying it as well. So more than CNH, the rest is moving around it.
Yeah, exactly. Right, so moving on, the RBA, they hiked 25 pips. They did mention in the comments of RBA's low came out not so long ago, and said they could return to larger rate increases if needed, and that rates will need to go higher, but they're not on a preset path. So keeping the doors open, as most central banks tend to do, no preset paths, yada, yada, yada. But for all the comments, they are going to remain on their hike cycle. Australia's final PMI was down a pip, 52.7 versus the 52.8 flash, down from 53.5 in September. Now, the Riksbank was also out this morning with a survey, and they found that the functioning of fixed income and FX markets related to the Swedish krona has deteriorated. So a bit of a warning there for markets in light of obviously what's going on around the globe, everyone hiking rates, so on and so forth. So a little bit of deterioration in those markets there could mean we're going to see others having the same issues and maybe having to step into their relevant markets as well. Over to Japan, their manufacturing final came in unchanged. It was down 1 to 50.7, I think, from 50.8 in September. So nothing changed in there. Probably the main news out of Japan, as Kay mentioned, was that Suzuki has pretty much admitted that they were or are doing stealth intervention, so more a bit of smoothing rather than coming in and hitting it with a sledgehammer. We had a feeling that was likely possibly the case anyway. So they're in just perhaps sitting again. They're not picking levels in this. They're just looking at the volatility, and if things get too volatile, then perhaps they'll just start layering in some offers and putting a bit of pressure on, as I say, rather than hitting it with the sledgehammer. But the main news out was that Japan's biggest electricity supplier, Tokyo Electric, is apparently going to ask the government for permission to raise prices. And this goes back to how things work in Japan. It's a big thing to raise prices. You don't just come along and up prices and off you go. Particularly for such a big company providing utilities like that, they will ask permission from the government to raise prices. And this is going to feed into inflation. So this is going to be felt more in the core inflation. It's going to keep inflation rising. It's going to keep inflation embedded in the Japanese economy, and that is something that's potentially going to force the Bank of Japan's hand at some point. Pretty big news there, isn't it, Kay?
Yeah, and I think the stealth intervention part is admitting it, even though we were also expecting it. But the stealth intervention is something that admitting it is a bit new, and I'm wondering. Okay, we've seen a move on the back of a weaker dollar and weaker yields, but also I think speculators are. They don't like the uncertainty. They prefer actually Bank of Japan to come in, smack it for 500 points, and then sit on the other side and go and buy it. But if you run into stealth interventions, you never know when they are going to happen. You never know where or how big they are, where they are going to try to put it. And I actually think that they might have been on it again overnight. But yeah, and that's something that speculators don't like. So they may be in the process of succeeding to buy time until either the Fed pivots or the dollar comes down a bit more naturally. So I think it's psychologically it was not a bad thing to admit that they were really intervening. Yeah.
Yeah, no, exactly. As you may recall, on the if you're on F.A.C.E yesterday, I took a little short when we were in the high 148s. I know Kay jumped on it as well. I fancied building another little short, mainly due to the Fed, the possibility that they're not going to be super hawkish. But you've also got the possibility of intervention in the backstop. I never trade intervention usually for the sake of possible intervention. There are times I have done, but I'm sitting on a little short at the moment. You still in yours, Kay?
No, I'm going to show a picture later on because I failed to be patient yesterday, and I'm really pissed off with myself. So,
okay.
No, I didn't write it, man. I mean, my patience got tested, and I tested negative.
Well, I hope that turns around, mate. I know what it's like in these markets. You know, you get a bit of profit, and the way it's jumping around, you got to take some off the table. So yeah, I know exactly where you're coming from, as I'm sure we all do. Well, let's crack on in, and I'll give Kay a chance to have a look at the charts as he ducked out yesterday. Over to the UK, Sunak and Hunt have said that it's inevitable that all Brits will pay more tax. We've got obviously this mini budget or autumn statement coming up November the 17th, and everyone's trying to guess around what's going to happen there. It's looking more tax rise than tax cut at the moment. But a bit of good news from the PMI, well, good news and bad news. Still in contraction, but it rose 4 pips to 46.2 in the final number from the 45.8 flash. However, jobs contracted for the first time in 2 years. So a bit of a worry may be coming into the UK jobs market there. Manufacturing isn't a huge sector for GDP in the economy, but if it's the start of something, we need to keep an eye on that to see if that picks up and further job losses come in, because the UK jobs market has, like the US, been pretty strong. In Germany, let's get the calendar up while I'm waffling on about this. In Germany, maybe a bit of inflation relief there. Import prices down 0.9 on the month and dropping year on year from the prior month, though still quite strong at 29.8. I don't know what this middle one is, but this is the one to look at. 0.6 was expected, came in as a negative versus the 4.3 price, and maybe a bit of inflation relief coming in for Germany there. Lagarde was out with some comments saying pretty hawkish by my reckoning. She said they haven't reached their destination on rates yet, and they must keep hiking even if recession risks rise. So a bit of a taking a leaf out of the Fed's book on that one. Going back to some of the data yesterday, and I looked into it, we had the Chicago PMI, which came in soft again. Where are we going? Let's find it. Where are we? There we go. 45.2, so softer than last month, missing expectations. Then we had another small regional survey. The Dallas Fed manufacturing came in worse. I looked into the details on that, and the employment component actually rose. It rose to 17.1 from 15 prior. So again, we're seeing a similar theme where these numbers are coming in negative, but employment is not rolling over yet and is not going the way that the Fed want it to go. So there's still a battle to be fought there for the Fed, and they'll be keeping an eye on those smaller metrics. It's only a small number, but I want to see the trend that's going on, particularly for employment and what's happening there. Biden has been talking about the possibility of windfall taxes on energy companies. I'm not sure how strong that is. It has been floated before. Apparently it's being floated again. I would personally put it in the camp of waffle ahead of the midterms, saying things that potentially appease the voters, but it could become something. And if it does, we need to see the levels. What's going to happen with stocks on that basis? No one wants a windfall tax. It's a bit... while it may be politically sounding good, factually it's not a good idea to start windfall taxing companies just because they're making money. But we need to see where that goes. There's also been a lot of comments out between US, China, Russia. The US, as Blinken, I think it was talking to his China counterpart, talking about keeping communication lines open, so on and so forth. But China has been also talking to Russia, and they were reaffirming their commitments to working with Russia on various aspects. Didn't really talk about the Ukraine war, so China's stance is pretty much still the same, but there was a lot of self-back patting that they're going to increase cooperation with Russia, and Russia's a good ally, so on and so forth. So politics being played out there. Stel, Kay, you got any other headlines you want to throw in that I might have missed, or was you want to highlight?
You never miss anything. I just want to say one thing about the ECB. Isn't it amazing how they're now continuing with, they said, right, they're going to continue with hikes even if they see signs of recession coming. And it's amazing because they're doing this to preserve the credibility, right? And it would have been so much easier just to start earlier and then finish earlier, but now they start late and they're going to be finishing late. We've said this many times before. I know I'm repeating myself, but it just amazes me how every time they do that. Anyway, sorry to rant about central banks.
All right, Kay, you got anything, mate?
Not really. There was this one comment from one of the big trading houses in Japan. Itochu is really one of the big five, right? In energy, and he said, the boss said that Japan's near total dependence on imported energy means it cannot survive without continuing to buy oil and gas from Russia. And that, coming from Japan, shows how desperate they still are over there. And it's a pretty big statement coming from one of those big five trading houses, because they have a lot of a lot to say over there, and it's quite it's quite significant that they're still saying so. Japan somewhere is still a bit desperate for everything.
Yeah, thanks, mate. Just want to answer John's question. Anything to read from the BOE offloading gilts this morning? Not really. It's been planned. We knew it was coming. We know what they're doing. It's not a surprise to anyone, but we'll see how that goes and see if it produces any ripples in the gilt market, liquidity problems. But I'm not seeing anything this morning that warrants any particular caution. Kay, you seen anything, mate?
No, planned, completely planned. And the thing is with QT, it's always the same issue. It's everything is planned, so the market is completely prepared for it, or should be at least. It's just the speed and what it may mean over time, just like the QT in the US, and we've seen a little bit of nervosity starting to emerge around it. But in the UK, they just at the start of it, and I think it's like, is it 25 billion or 2.5 billion? Well, how much was it? I don't even.
Yeah, I've got something like that. It's they're doing it for I think is it eight auctions till the end of the year, I think.
Yeah, something like that.
They've announced it a quarter in advance, so I think we've got 8 auctions to the end of the year, and then they'll announce the next quarter's stuff and the next quarter's stuff. So
yeah, that's it. So as long as they're on autopilot and the market has been advised by it well in advance, there should not be any ripples coming from it.
Yeah,
in the short term.
I'm sure we might get some comments in the meeting on Thursday on the BOE meeting if someone asks any comments. But apart from that, I don't see anything of note coming from that.
No.
Right, what I did want to look at quickly is just to give an update on the rate odds. Let's ping that up for you there. Just from the various central banks where we are at the moment. The Fed there, you can see we've been swinging between 75s and 50s. At the moment, we're pricing 75s and 100s, 98.4% probability there. So everyone seems well on target with the 75 pip hike. As you can see there from the Bank of England, still pricing 75 100s. But again, 75 is the base case from that one. And as you can see, we've come down on the numbers from the Bank of Canada and indeed the RBA on their 25 pip hikes. So we're pricing 25 50s for the BOC, and we're pricing 25 unchanged now for the RBA. RBNZ still their pricing 75 50s. That might look a little bit high, I think, 75 50s. I don't know, maybe 25 50s, maybe more the real expectation there. So that's a quick look at the central bank rate odds going there. Looking around the markets at the moment, I'm mainly just in management mode at the moment. The RBA hiking didn't really do much for the Aussie dollar, but this China stuff seems to be behind most of the lift this morning. We're mooching around this 64.50s area, bit of a on-off pivot level. For me, it's 65 or nothing. If we can't get above that 65.20 40 zone, that blue zone up there, we remain in range. To the downside, we're looking probably round about that mid 63s. As again, a bit of a intermittent line in the sand. Under there, possibility of heading back down to that 62 range. So for me, we're still in the ranges, going sideways until we break either side of that one. I may start to look now at some $1 shorts. I don't know if this rumor becomes a bit more factual. What is a bit telling is that we've had another high come up a bit short of the prior high. So at least potentially gives us a bit of an area to lean on up here. Another one I've been looking at is dollar CAD and this big 35 level. We're getting close to the FOMC, so I'm a bit loath to try it, but we have the potential for a break lower if this level fails on call it a fourth attempt. If it does, then it could give some pips downwards. But if I do try that, I'm going to be very careful about the proximity to the FOMC and the drivers. So just a couple of bits I'm looking at there. But Kate, I'll hand it over to you, mate. Stel, unless you got anything you want to show today in between?
Not really, no. I mean, things are moving, but I don't have anything concrete to say ahead of the FOMC tomorrow.
Yeah, no worries, mate. And we'll have further thoughts on that. Okay, Kate, I shall pass the baton on to you.
Okay.
Let me stop that. And just a quick answer to Jack. I'm following the T20. No, not following that at the moment. Although we are obviously setting up for the Ashes, so that's one I'll be keeping an eye on.
Do you see my screen?
Yeah.
Do you see the picture?
Yeah, got it, mate.
So that's what happened yesterday. Around fixing time, I tried to buy cable, and I sold $yen, and both tested really my patience, and I failed on both because cable went below the day's low, and I've got whacked out, and $yen around 10-11 p.m. was still hanging around 140, 148.70, and I just took, like as I call them, beer pips on the position, and let them go. So that is something I have to work on again. Even after 40 years in the market, sometimes it happens that we are still trading like beginners. So I just wanted to show that we are not. I mean, we still make mistakes at any rate.
Speak for yourself, mate. No, I'm kidding. We all do, obviously.
Okay. Right. So first of all, what I want to show is the yen, in fact, and more talk about what's happening in yen than really picking a direction here, because obviously in all the dollar pairs, we are pre-FOMC. Let me quickly put up the tens. We are turning around this 4% on the 10-year. We try to get back into the channel, but for the time being, and that's really my expectation, that's going to happen. We are going to go into the FOMC, I reckon, around somewhere around this 4%, give and take a few BPs. We could today retest the lows here around 390, but I would be surprised that ahead of any Powell announcement, confirmation, negation of any expectations that the market may have for an upcoming pause or pivot. I'd be surprised if we really drop far below where we are now. We are trading around 395, so around this zone. As I said, I think we stay roughly in this zone until tomorrow. Fact is, though, that the leading indicators that we are starting to see now are slowing down. Or getting a bit negative. Doomsayers will say that we have turned the corner and everything is going downhill from here. But I still think it's a bit too early to call. But we are starting to see the effect of the rate hikes as well. So if we get, but today, what have we have today? We have the construction spending, ISM manufacturing, the JOLTS also today. Oh, okay. So there's a bit of pre-FOMC market movement stuff coming up anyway. But yeah, so this is, call it a bit logic that we are coming off in the yields as people are looking at those two things. The data starting to weaken, and we are pre-FOMC, and the hopium is very much there for the Fed to signal possible pause. So on the $yen, that's reflected as well. And then the other thing on the yen is undeniable, the admission of Suzuki saying that they really did stealth interventions. We saw it on the numbers, because they were too big just to have those two latest interventions justifying of the, what is it, 6.3 trillion yen of interventions, which is close to $50 billion. It's not negligible. And so I think they are really trying to buy time until we see a natural reversal in the dollar coming up due to the data, due to the Fed slowing down possibly. And yeah, we're still looking at the volatility, but I've got we have to take into account the 150 now. If we go back for back test, it's a psychological level. They could still they could now go and firmly sit on the offer there. But we will see if and when we are going to get back up there. Still, okay, this was this value date end of month little breakdown, but failed. To me, still the big levels are around here. Okay, this trend line is now moving higher, could be a little bit more in the middle of nowhere, but 145.5, 144 3/4 doesn't change for me. That's a bit of do or die area now in the dollar yen. If we ever get there on tomorrow's FOMC, pay close attention to this level, I would say. If we get a close below here, we may really start to see a possible reversal, at least in the dollar yen for now. But overall, the fundamentals in the yen are still playing against the currency, right? And so what happens on the dollar yen may be one thing, but what happens on yen pairs, other yen crosses may be another one. I'll come to that perhaps another time or a bit later in the week. But we're starting to see tops getting formed in stuff like the euro yen, for instance. Keep an eye on 145 3/4 here. That if we ever get below and stay below, it could mean that we are trying to get back into this wedge below 145. So keep an eye on those kind of formations, because we are seeing them in a couple of other pairs as well. If you look at the sterling yen, for instance, oh no, that's the cable. Where's my sterling yen? Here it is. Okay, we had this spike on dollar yen and cable the other side, but we're also starting to try and start to hit the head a little bit against resistances. And there's a few yen crosses who are starting to do the same. I don't know whether we see it on the Canada yen as well. That's just an example. We have done the prior top here, then another spike here with the interventions, then another top here, but we're starting to fail. So keep an eye on yen pairs. It's I think we're in for interesting times. Still, I'm not a big fan of buying yen, but we have to respect all these things. Quick look at the euro dollar. This looks like those mini channels. We've been back down below the failed trend line, but I'd argue that was month end, really. I mean, there was a lot of dollar being bought for month end, and we've seen the reaction. Today, we've also pre-FOMC as we will be mentioning another few times. There's a bit of resistance here in this 99, 45, 55, call it 45, 60 zone. We tried it this morning, failed there. To me, overall, the euro, Estelle was saying, they're still hinting at hikes, but they, in my opinion, will never reach dollar levels. So we might have a bit of dollar activity here, but to me, the euro dollar is probably going to be the slowest one to break out if a breakout happens. Other currencies may be a lot faster, and thinking about stuff like cable or Aussie or Kiwi with a bit less liquidity. Well, the Aussie is another thing, because RBA is not raising hikes, not raising rates fast enough, in my opinion. But this may be a slower one, and you could see more cross trading in the euro than actually euro dollar being on the move. Yeah, as I was saying yesterday, I really thought we would be holding just below 115. That last little move down to here below the prior lows killed it for me, unfortunately. But anyway, the overall picture looks a bit more constructive, I would say. But again, everything depends on FOMC. So I'm keeping a close eye on what's happening in the 116.10, 116 1.5 zone. That's going to be an interesting one tomorrow, and then above there, as I've been mentioning already a good few times, the 117.5, 117.60. If in turn FOMC stays on course and not giving us anything dovish to chew on, we shouldn't rule out a retest of 114, and why not 113.5 on the cable. So for the time being, I'm in a really short term, I think we are in between 115 and 115.60-ish for the time being. Not a lot to say. So, and I'm on the Aussie, that's already covered. The Canada is covered. I'm rather going to look at crosses. If we stay away from dollar pairs into the FOMC, there are a few interesting crosses going on. So we've seen pre-ECB spikes on many euro crosses, and they are slowly but surely starting to come off again. And I think Euro Canada could be an interesting one, even into the FOMC, because it's part of the Americas bloc. So this one seems to have like the 130, the 135 is already at this level, 135, 135.15. And I'm looking at it to possibly retest somewhere around this 134, 133, 3/4. So in the really short term, if the positivity in the market remains, we could see the commodities, we could see oils keeping a bit tone, and some of the euro crosses slowly drift lower again. I'm keeping a close eye, as I said, on what's happening in the 135 figure 15 zone. Other interesting one is Euro Kiwi, and Euro Kiwi may be a more interesting one than the Euro Aussie. As I said, the RBA is on a slow rate increase path, and we have seen Aussie Kiwi staying under pressure, and Euro Kiwi this morning retesting what could be still a bull flag. But if we continue to come off, this is going to rather look like a new trend. So keep a close eye on where we end up the day. I think the key on the day is sorry, 169, 169.15. If we stay below, this could like just gently drift lower. If in turn we get something where I say like hawkish from the Fed tomorrow, it would weigh on risk, and this may actually bounce because the euro will be probably slower. But I'm also looking at this because of, in my opinion, the ECB was still a relatively dovish hike. So any spikes on here back to 170, 171, I'd be looking perhaps to try and catch a bit of this move lower. Euro Aussie, idem ditto, but I'm not a huge fan of the Aussie right now. Despite what China may be doing, RBA is a bit too slow in my opinion, but still keep an eye on the Euro Aussie here. We had a retest earlier today on the RBA of the 153.70. This is the level on the day, 153.70, 154.80. We are turning around 154 the figure. So watch 153.70. Add 153.50-55 perhaps for confirmation. That for the Euro Aussie. And then yeah, just on FX. This one is going to be Euromex, one of my favorites still, because we've got a huge interest rate divergence. We're seeing it's hopping or bobbing around this 50 is the support, 50, 70, 75, call it even 85 level. But we've seen the spike pre and on the ECB, and then same thing as on the rest of the Europe pairs, really starting to come off again. We still have a bit to go until Banxico. That's going to be on the 10th. That's even after the midterm elections in the US. So there may be some moves deriving from that. But for this to continue lower or to see a little bit of a rebound, we need a mild neutral to mild hawkish FOMC tomorrow. A complete dovish FOMC could actually see this spike, because Banxico already said that they would not necessarily follow hikes in the same way as the Fed may do, meaning they might do another 75 on this meeting and then go slower. So if the Fed is uber hawkish, this could actually, the two extremes wouldn't be good for this cross, uber hawkish or of course a Fed pivot, because then euro may shoot. But all things equal, neutral FOMC tomorrow, I still see this. There will be room, and I think in the long term we are going below 19 still. Yeah, I've seen it on the dollar mix. The dollar mix, we're in the zone, right? As I was already mentioning a good few times, low 1970s, 70, 80s, where it really plays ball or not, adding 65. I really don't know here. A lot will depend on what's happening on FOMC and then later the Banxico. We have seen now that 1990 already capped yesterday, and we've seen a decent move lower. I know a lot of people are looking for this lower. I'm not going to disagree, but for the time being, personally, I don't see too much of a trade in this. I really want to wait until we break those levels, and then we can say we are back into real negative territory. If we hold here, I can see this like really continuing to range trade for a while, until perhaps even Banxico. So, but if we get a break below 1965, then I think we are going down again. Probably down to those 1940s. Last but not least, metals. Okay, up and down in gold. Gold got the message as well from the Chinese opium treats. We're back into the 1650s. It's been a little bit of a zone, but to me, still in a range now. This one, I'm going to take it out because this is getting run over more than crossed more than Shibuya crossing in Tokyo. So this is going to go. Yeah, I mean, still in the range for now. Any negative news on China, we could be back down to 1630, and a lot will depend on what's happening on yields tomorrow, right? So I'm not going to. Small resistance here, 1655. We're trading 1652. Downside 1630. You got 20-25 bucks to play inside. If I wouldn't exclude this afternoon, the Americas to take it a bit higher. So why not go back to high 1660s? Interesting one here, and that's also thanks to China and a little bit weaker dollar, is that silver is in the test of the lower channel. And I wouldn't rule out a bit of a push higher on this hope for changes in China. I wouldn't really rule it out. We could get back into the 20s today. Not sure if 20 and a half is reachable, but at least why not going to the 20s? And then for tomorrow, this is going to be the important zone, right? Just below 20, 1980s. Either you hold it or you're back below, and then the risk is that we are going back to sub 19 bucks, depending on what Jay Powell is saying. But for today, I wouldn't rule out a little push higher. And with that, I'll give it back to you, Ryan.
Thank you very much, mate. Right, what shall we have a look at? I wanted to have a look at. Was asking about the pound generally. Is it a dip buy? I think it is, but we still can't rule out how things are going to play into, particularly into next year, with recessions and everything like that. We're still playing the dirty shirt game, the same as we did on the way up. We're going to be playing it the same on the way down. You can look at the pound in the same relativity as you can the euro in terms of it's not going down anymore. Okay, so even with where all the central banks are doing, we're not seeing new lows appearing in cable. Now, we know we've got this 109 area. These are the sort of levels you want to look at. For me, the key move in all the mess that happened in September was this move here, because that was the was it 1985 low? Let's see where we go. Ooh, there we go. That was that low there, give or take a few pips. Okay, so immediately after we got that blowout that Sunday night, whenever it was, after we got this blowout and the recovery, the first place it found support was again into that zone. So that was a pure case of an old level, big old level, got blown out in a liquid time. Straight after, it shows up again. That to me is a real big signal. And Kay's been mentioning this, the 109 area as well. That's where we bounced to, that sort of area, found resistance first before breaking. Straight after, we found it as support. So you've got two real big key levels there. Obviously, we're well away from those now in the 115s. But in terms of looking at the longer picture, is the pound a dip bite? Yes, I think it is. But you've got to pick your levels. You know, one bit of bad news and we can be at 113, 112. Such is the volatility in it. So you may need a bit of patience with that if you're going to be getting involved at these sort of levels. You need to, you know, probably go low trade size with a bit of a wider stop, rather than a bigger trade size and a tighter stop, because tighter stops aren't really working in this one at the moment. Or you can pick your pound poison elsewhere. There you go, your short pound Swissy and Guppy. Okay, let's have a look at those two. Let's have a look at Guppy, see what that's doing. Not one I look at a lot. So just looking at this one, and I don't know if Kay's got any greater influence in it. You can see it's been a while since I've had a look at it. If you're short up here, that's fine. You're going to need to be watching these highs. You know, we're not really dipping from these highs at the moment. So I don't know where you are short from. Hopefully it's right up here, and you're making bundles of pips. If that's the case, obviously playing the Guppy, you've got to watch what's going on in Japan. So you're keeping an eye on yields, you're keeping an eye on dollar yen for the yen side of the trade. Pound Swiss, I don't know the last time I looked at the pound Swiss, probably about 2 years ago. Probably not even in my charts. But if you've got something in there, let us know. You know, put up what you're looking at and we'll take a look at it. But as you're short, run it as far as it goes, mate. But, you know, be careful if you get a turnaround there. Aside from that, I'm sitting here strumming my fingers like a lot of us are. We've over the month-end hump now, so things should be a bit more clearer. But now we're well into Fed zone, so we're going to be watching and waiting, see what happens, keeping an eye on yields. The 2-year is my marker going into the Fed. We've been speaking about this quite often the last few days, because it is a shorter term yield. It is reflecting more so the Fed's expected ceiling. So anywhere sort of around 4.4, 4.5, maybe up to 4.6. If we're in that zone over today and into the Fed, that's going to tell me that we're pretty much middle of the road for what's expected for the Fed. If we start moving down to here, that's going to point to the fact that the market might be getting a little bit too dovish on the Fed. If we're going up above 4.6s, again, that'll tell me that perhaps the market's getting a little bit too hawkish, the Fed. And as I've been repeating, what I want to know in the here and now is what is the market doing into the Fed? Is it too hawkish? Is it too dovish? Is it neutral? Because from that, I know where my biggest price risk is. I know whatever the Fed delivers, I can match that off against the market expectations and then have a good chance of predicting what the market's going to do with it. Is it going to rally yields? Is it going to rally the dollar? Or are we just going to do nothing in a 50 pip, 100 pip range, and then it's all forgotten about tomorrow or Thursday. So that's my guide there, the 2-year yield, just as a rule of thumb for that. I haven't looked at what's coming up for the rest of the day. Have we got much on the rest of the day? We've got the ISM, haven't we?
Yeah.
The ISM, which I've got a feeling. I've got a feeling it's going to be bad today. That's my prediction.
Well, all these leading indicators have been turning recently,
Yeah,
so that's the reasonable assumption.
Yeah, and it did turn last month, but this one has been holding up a bit better than the others. But I think we could be in for a bit of a shocker on this one. I'm not going to trade it per se. I'm already positioned, so I don't really need to do anything on it. But this is just a off the cuff feeling that I think we're going to see a bit of a shocker today. But whatever happens in the main number, keep an eye on employment, because that's the one that needs to really tip further. It's already tipped into contraction last month, but it's expected to bounce back into expansion. But that's going to be the one you need to keep an eye on. And obviously, if this number here, the main headline number, drops into contraction, then we could have some fireworks. And obviously, the calendar number there, keep an eye on as well for the loonie to see what happens there. What do you make, Stelios? You think we're going to get big miss, little miss? What's your thought?
On what, ISM?
Yeah.
Well, I think it's going to be a miss. It's going to be a small miss, but look, we're expecting 50, so any miss is going to be contractionary, and that has a psychological effect on markets. So, but if you ask me what I think it's going to be a small miss. High 49s.
You're going for a small miss. Kay, yeah. What do you reckon? Get your ass on the line there.
No, you're taking me by surprise there. I don't know. It's likely going to miss, okay?
Yeah. There you go.
I think if we look at the rest of the numbers, it's probably likely going to miss. The surprise would be a beat. Let's put it that way.
Yeah. Again, this is what we've got to look for, the shock factor. Is it going to be a big variation? Why is it important today? It's important today because we've got the Fed tomorrow, and the market will jump around. If inflation, if that employment number drops further into contraction after being expected to jump, the market's going to start getting dovish on the Fed again, and the pivoters are going to come out of the woodwork, and then we're going to see potentially a big move going into the Fed again. That's why I'm looking at the twos. Will a move like that show the market being too dovish or too hawkish? So that's what I'm looking at anyway. We have got jolts out as well. Keep an eye on that. It's a bit of a lagging number. It's for September. There has been a big gap between the ratio of unemployed and job openings that we've been watching for a while. It has been dipping a bit, the jolts numbers. Keep an eye on that. Keep an eye on the quits metric in that as well. That shows people who are potentially trading up jobs, leaving one to get a better job elsewhere. If that's strong, that suggests that the jobs market will remain elevated. And on that note, we shall call it a session. Good luck, Iona. You're short at 171.50. Very nice entry, sir. Hope you make many pips out of it. Hope you are taking some profit off the table already. So good luck with that. Thank you, everyone, for coming to the Flow Show. Thank you, Kay. Thank you, Stel, as always. And we shall see you in a while on the F.A.C.E.
Thank you, guys.
Thank you, guys. Have a good day, everybody.